Will a distribution from my Roth IRA be tax and penalty free? Let's break it down on this episode of the Hawaii Retirement Show. All right, welcome everyone. Thanks for tuning in to this episode of the Hawaii Retirement Show. Today's episode, we're talking, will a distribution from my Roth IRA be tax and penalty free? Not just tax free, but penalty free. And so we're following along like we have been recently in a lot of these episodes, following along with the Hawaii Retirement Show resource, a little flow chart here that'll be posted up on the website. For those watching on YouTube, it'll be up in the YouTube video. And we just kind of go through these series of questions to figure out, to determine, whether our distributions from our Roth IRA are tax and penalty free. So the first step on this journey here to figure everything out is to determine, will the distributions exceed contributions? And the reason that's important is your contributions to a Roth IRA will always be tax and penalty free. The money you put in can always come out tax and penalty free. Really, when we're talking about this here, the tax and penalty free, we're talking about earnings, right? Earnings on your Roth IRA contributions. Those may or may not be subject to a 10% penalty. And we'll get into the 5-year rule. They may be subject to income tax as well. Okay, so to start us off, contributions are always penalty free, right? So now we're talking, if your distribution exceeds the amount of contributions, then we move on to our next step, and that is, does your Roth IRA hold amounts converted from a traditional IRA? So now we're talking about conversions, right? Start off contributions, now we're moving on to conversions, and then we'll move on to earnings. But as we look at conversions here, it's important to know that the Roth conversions come out in the eyes of the IRS in a FIFO method, right? First in, first out. So if you did a Roth conversion this year and then next year you do another one and you made distributions from your Roth IRA, after we've gotten through all of your contributions, then we move on to conversions is what the IRS is looking at. And we're going to look at first in, first out. So the first conversion, the oldest conversion is removed first in the eyes of the IRS. And why that's important is we get into the 5-year rule for conversions, right? And so that's when you have to ask yourself, were the funds that you are withdrawing converted in the last 5 years? And if they were, the distribution of the conversions, and this is excluding backdoor Roth IRAs, is subject to a 10% penalty unless an exception applies, right? There's always, unless the exception applies. And that is if you're over 59.5, then the 10% penalty won't apply, even if the funds that you are withdrawing were converted in the last 5 years. Okay, so if the funds, were converted within the last 5 years, then there is that 10% penalty unless you are over 59.5. Now, if they haven't been, the distribution of the conversion is tax and penalty free, meaning it's been in there longer than 5 years, then you're tax and penalty free, and you don't need to worry about this as far as the conversion's concerned. Now, again, I just want to reiterate, I know I'm repeating myself, it's important when you're talking about distributions from a Roth IRA to think, is this distributions, is it a contribution? Is it a conversion? Or is it earnings? You really got to break it out and parse it into those 3 areas. And remember, contributions come out first, then it's conversions on a first in, first out method. Then we start looking at earnings. Okay, and the earnings is the big area where we get into a lot of this 10% penalty, right? So to determine if the earnings will be taxed as ordinary income or subject to the 10% penalty, we got to look at, 59.5, and then some of the exceptions. Are you disabled? Are you a qualified first-time home buyer, right? Because then there's that $10,000 lifetime limit that you can withdraw, right? So let's say we are older than 59 and a half. Okay. And we're distributing earnings at this point, right? We've gone through our contributions and conversions. Now we're in the earnings, and we are over 59 and a half. Then you have to ask yourself, will the distribution occur within 5 tax years of your first Roth contribution? And what they're alluding to here is the 5-year rule of, there's 2 5-year rules. There's a 5-year rule. Actually, there's actually 3 as it pertains to inherited, but 2 5-year rules as far as we're concerned. One being for conversions, and one being for just the Roth IRA program as a whole, right? So you need to have, I don't want to get too deep into the 5-year rules right now, but there's a 5-year rule for just contributions. Okay, and so that's what this is talking about. So if the distributions occur within 5 years, meaning you haven't met the 5-year rule, then the earnings are subject to income tax, but there's no 10% penalty. Okay, so we're saying you're older than 59 and a half, you haven't met the 5-year rule for distributions from a Roth. Since you're over 59 and a half, no 10% penalty. But because you didn't meet the 5-year rule for Roth contributions, the earnings are subject to income tax. Okay. Now let's say you've had a Roth IRA for longer than 5 years, and that's, I don't want to get down into the weeds here of how it's calculated, but let's just say 5 tax years. Okay. Let's say you're over 59 and a half, and you've met the 5-year rule for Roth contributions, not conversions, 5-year rule for Roth contributions. The distribution of earnings is tax-free, and there is no penalty because you satisfied both the 5-year rule and the 59 and a half. You're free and clear at that point. Okay, so let's go back and look and say, if you're not 59 and a half, okay, if you're not 59 and a half, then you have these exceptions to get out of the penalty. And those exceptions are, like I said, the first-time home buyer, there's disability, there's disaster, there's adoption, where there's certain limits you can take out, right? So again, if you're under 59 and a half and it does qualify for one of these exceptions, then you can avoid the penalty, but the earnings are going to be subject to income tax. Okay, not your contributions, your earnings will be subject to income tax. And likewise, if you're under 59 and a half and you do not qualify for any of these exceptions, then your earnings are subject to income tax and you pay the 10% penalty. Okay, so these exceptions get you out of the 10% penalty, but if you're under 59 and a half, you're still subject to pay income tax on the earnings from your Roth IRA. And the whole point of that is, these accounts are designed to help individuals fund their retirement, and they want to incentivize keeping the money in there for your retirement, because that's really what the money is there for. That's what this account is designed for, is for your retirement. And so I don't want to say they disincentivize taking it out early, but I guess, yeah, they disincentivize taking it out early, and rightfully so. So that way you hopefully can use this Roth IRA to help fund your nest egg in retirement. And as long as you are over 59 and a half and you meet the 5-year rule for Roth IRA contributions, then those distributions come out tax-free and penalty-free. And I think the most important takeaway from this episode is just to parse out, when you're talking distributions from a Roth IRA, just parse them out into 3 different categories. Are these contributions? Are these conversions? Or are we talking about earnings? Right? Because the way you're going to figure out whether or not it's tax and penalty free is understanding which one of those you're taking out, and understanding that there's an order to which you can take it. You can't decide which one you're taking out. That's already decided for you in the tax code. The IRS is going to say, if you're removing from your Roth IRA, it unequivocally is contributions first, then it's conversions on a FIFO method, and then it's earnings. Okay? Contributions are always tax and penalty free. And, this stuff can get really complicated and really simple. I think this flowchart is real. All these flowcharts and checklists and resources from the Hawaii Retirement Show are super useful to kind of give you a visual to go through and determine from your own situation what distributions will be, tax and penalty free, or what will be taxed, what won't be taxed, and what will be penalized. So I think that wraps us up here for the distributions from the Roth IRA, determining whether they will be tax and penalty free. I know a lot of this stuff might be hard to follow in the audio format, but that's why there is that resource there up on the website. And if you check it out on YouTube, it'll be up in the video. As always, if there's anything in particular you'd like me to talk about on the show, email it over to aloha@hawaiiretirementshow.com, and we'll catch everyone on the next one.
The opinions and statements presented on this show are for general information only and are not intended to provide specific advice or recommendations. Never make any investment or financial decisions based on information offered on this show without first consulting your financial, legal, or tax advisor. All economic and performance information mentioned on the show is historical in nature and is not indicative of any future results. All indices mentioned on this show are unmanaged and cannot be invested in directly. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Lastly, all opinions expressed by Jason Cutitta and any guests on the show are solely their own opinions and do not reflect the opinions of or are endorsed by ToBA Financial. For Jason Cutitta, investment advisory services are offered through ToBA Financial LLC, a registered investment advisor offering advisory services in the state of Hawaii and in other jurisdictions where exempt from registration.